If you own GLD as an electronically traded fund, you do not own gold. I want to show you why you think you may own gold, but you don't actually own gold. I'm going to go over the difference between owning gold physically compared to owning gold on the stock market. Let's go. Okay, I'm going to go over the pros and cons of owning gold as an ETF compared to owning gold as physical bullion, something you can actually hold in your hand. Okay, so first, pros and cons. Here's the first pro of a gold ETF. First is they're relatively liquid, which means you can buy and sell them freely, just like any other stock, which makes it nice. They're simple enough for anyone to get. You can buy them on any platform that does any stock trading. You can definitely buy GLD. This is what most people buy. There's also other types, but that's the most common one. Easy transaction. Again, just as you can sell it just as easy as stocks. It can be used as a hedge against inflation. That's where I disagree because you don't actually own it, and I'll go over that in just a second. And then lastly, it can be used as a loan collateral. Okay. I guess, you know, when you're going out for a mortgage, they ask you your assets and such, so that might be a good thing. Cons. Fees and interest rates. That's what I don't like about. There's a counterparty. There is someone there who's charging me interest, who's charging me fees. When I own it physically, I don't pay any of that. Con. And they're also liquid. So what I like about having physical things and having real estate, having these things that take a lot more in-depth purchasing and knowledge is because you can willy-nilly buy and sell a gold ETF very, very easily. Now, I don't know about you, but sometimes I make emotional decisions that are not always the best decisions. And a lot of that happens when that can be your worst enemy when you have it really, really easy to selling it or buying it. So sometimes you can make bad emotional decisions. That's what I like about owning physical stuff, real property. Okay, so physical gold. Pros. It's physical, tangible form of investment. Yes, you can actually hold it, feel it. You don't need anyone to tell you what you can do with it. It's a great backup in case of emergency. Of course, people would say, but what about, you know, if the financial apocalypse were to come, is that actually going to help me? Well, supply and demand. Is there a huge supply of gold? Not really. Not really at all. But you think there's not really a big supply of gold, but then you look at graphs like this one, and it shows the central bank gold reserves. We'll move that out of the way. United States has 8,100 metric tons. Germany, 3,000. Italy, 2,400. This is what makes me wonder about the gold price and whether it's going to go higher, whether it's going to go lower. Look at this. So U.S. has not added any gold reserves the last 10 years or so. This is as of 2019, so it could be different. But look at Russia and China. We'll start with Russia. Russia has gone up from 600, just about 650 metric tons to 2,100. They've added over a twofold on what they had previously. So you think to yourself, why would they keep on accumulating gold if it's not a useful monetary instrument? That's the question I ask myself. And then go back, look at China right behind it. China's gone from 1,000 to 1,800. They've done almost a doubling. And this is what's curious about both those countries. Are they actually reporting every ton that they're buying or every single little bit they're buying? I'm going to guess the answer is no. We've seen with the COVID situation, the CCP definitely does not, shall we say, share information liberally. They share it very conservatively and sometimes not at all. So these two countries right here make me think that is a really big jump. Kazakhstan, Uzbekistan, a couple other ones have, what is that? Turkey, Venezuela had to unload, obviously. Thailand, Poland. A lot of these countries are diving in and purchasing a lot of gold. And you wonder why. It just makes me wonder. Wonder. I have no answers. I just simply put inquiries and think that. And I want to show you just inflation-wise. This is B of A, I think it was maybe March of this year, on a earnings call, was one of the first ones to say that they're going to predict some transitory hyperinflation. Now, what does that mean? I'm not really too sure. But look at the, oh my goodness. This is how many times the word inflation is used on a earnings call. And look at that. Right after 2020, we're in 2021 now. It's gone up 800%. So you think to yourself, is inflation going to happen? I think it's going to happen immensely, which means that gold is a great hedge against inflation. Yeah, I love this. B of A crashes the transitory party, sees up to 4 years of hyperinflation. Yeah, I don't know about that, but, I guess the chips are going to fall and we're going to see where they're going to end up. So anyway, this is exactly why I like holding something physical, because GLD and any other ETF, you don't have any claim over the gold. You really don't. A lot of these companies, you need to either pick up and demand for delivery a huge gold bar, which is about $300,000 to $400,000. I don't know many individuals who have that saved up in gold, or 400 grams. Excuse me, not 400 grams, 400 ounces. Again, not many people have 400 ounces of gold saved up. That's a lot of money. So the question you have to ask yourself is, what can you actually own that there's no counterparty? Because that's why I don't like the US dollar. There's a counterparty. That's why I really don't like these things, these credit cards. There's a counterparty involved, someone who can or cannot accept the transaction. With gold, there's intrinsic value. It's 1 ounce of gold, no matter what country you're in, no matter what part of the world you're in, no matter what time of day it is. It's always 1 ounce of gold. It's, again, physical, tangible form of investment. I love holding things physically, things that actually are in my hands. I like that. It's a great backup in case of emergency. It's a great source of immediate cash in times of emergency. That's what and it makes me wonder. People say, oh, gold isn't money. Well, then why are Russia, China, other countries buying so many ounces of gold and putting it in their vaults? The United States obviously has far and away the most. I think it's a little over 8,000 metric tons. But the question is, why are these other countries doing it? And you would think if China is buying all these ounces of gold, all these tons of gold, under the table, it's not affecting the gold price as it probably should if it were reported. So you think to yourself, is gold undervalued? And it seems as though that it might be, because a lot of these transactions are not happening with the public knowledge. Makes you think. It can be used as a hedge against inflation. Again, of course, it can be used against inflation. As inflation usually rises, the gold price obviously rises. Your purchasing power on your dollar is diminishing, yet your gold price is going up, hopefully higher than inflation. And then control. The ability to own physical gold allows you a greater control and mobility over your assets. You decide when to liquidate and what to do with the money after. I mean, again, I like having the freedom to choose. I like being able to say, I'm going to do this with the gold. I'm going to do this with my money. It's just I'm moving away more and more. As 2021 continues to move forward, I'm seeing prices are rising. Some prices are lowering. There may be deflation. Who knows, really? I mean, we really don't know. Although I'm hedging my way both way. I'm having optionality with cash in case there's deflation. Then the dollar actually gains purchasing power. So cash could be your best performing asset. But I'm also preparing for inflation, buying precious metals, including gold, just in case that were to happen as well. And there's a couple cons of having gold. Cost of securing. It depends on how much gold you are buying. If you're an individual, buy a safe, buy a fireproof safe, put a deadbolt behind it, figure out a security system. There's a lot of ways of securing your gold, obviously. And then liquidation can be difficult. When the time comes to turn the gold into cash, you'll need to find the right place that offers the best rates. Yeah, well, the only reason I'm buying gold is to prepare for worst case scenario, end of the world situation. I don't plan on selling my gold. I don't plan on using it except for actually using it for as it was intended, money. God put it in the earth, and gold's going to be here a lot longer than you and I, and it's going to be interesting to see, because I'm just not going to sell it. I'm not a seller. I'm only a buyer. Only a buyer. So those are the reasons why I like physical gold compared to electronically traded gold, because you have to have a ton of money invested and a ton of ounces invested in order for you to even take delivery. The reality is, if you want to take delivery, and let's say everyone is, for lack of a better word, hoarding all the gold and asking all the storage places for the gold back, they're going to write you a check for the prevailing rate of whatever an ounce of gold is, multiply by how many ounces you have, and give you that check. Yeah, at that point, it's too late. The check means nothing. The gold means everything. That's why I like holding things, having control, having it in my hands, not letting any counterparty or anybody tell me what I can and cannot do with it. That is why I like physical gold. Again, I don't own a single stock, no bond, no investment. I don't like paper. I like real assets, and gold is certainly that, real assets. I will catch you guys on the next one. Have a great rest of the day.